Hello, my nieces and nephews. This is going to be the final educational video for the time being before we go into the other complicated little details behind algorithmic trading. Okay, so first of all, I want to preface this by saying that I just took this cell, right? If you don't believe me, please refer to the public Telegram group. The link is down in the description below. I'm pretty sure I sent it. All right. So we will be using this cell over here as a means of understanding today's topic of discussion. All right. And before we begin, you can see that we have a sell signal given by Trade Easy right here. All right. And you can see that price referred back to the midnight opening price down here, bottom right hand corner. And that is coupled with a key level, which you guys should be quite intimate with right now. That is this. Okay. Hit a key level. Now we're dumping like mad. Okay. So today's topic is going to be this: how you can measure reactions. What is a good reaction versus a bad reaction? Okay. Now, of course, this is fractal, right? So let me get right down to it. A good reaction is essentially when we form a swing low or a swing high, and the swing low is immediately validated by the third candle. Okay. When you form a swing high and the swing high is immediately validated by the third candle. Okay. However, there are instances in which the fourth candle does the validation, which is okay. But if it crosses the fourth candle's threshold, in terms of candle count, then it's not a good formation of a swing point, right? Now there's a caveat to this. The caveat is that okay, maybe the 1 minute chart has a formation that is more than four, but the 15-minute chart has a formation that is perfectly equivalent to three in terms of its swing validation, right? How we validate a good reaction. That's fine. Which means that the 15-minute chart is good. 1 minute chart, who cares, right? Now, in order to give you guys a good example, here's one. This cell that I'm talking about, we hit a key level as you can see, right? And on the 5 minute chart, you can see that this is a high, high, high. This is the third candle, fourth candle came down. So we validated the swing on the fourth candle, which is something I'm okay with, right? But my entry was actually based on the 1 minute chart. Okay, because I knew that I got a sell signal. I know that we're getting a sell projection. So I can easily take a sell, and my daily bias is bearish. My weekly bias is also bearish, right? So what happened over here is when price did this, we have a high, we have higher high, and now the entire swing formation got validated with one candle. So the candle count is actually one, two, three. Yeah. And what I did was I took a sell immediately, right? So I took a sell at the IFVG formation. You see, just because I'm teaching you this, it doesn't mean that you're going to forget every damn thing you know, right? I took a sell here, stop loss is up somewhere there. And TP was going to be, which actually hit, by the way, it was 3 standard deviations here. Okay. Now, if you take a look, here's what we have. Directly went straight to TP. Okay. So this doesn't change anything that you know so far. I mean, along the way that you've been learning everything, this hasn't changed anything. Because now, when we think about it, when we remove the fluff, let's say, remove the fluff, remove the deep, deep shit that's over here. If you actually think about it, today I was doing a live stream with Trade Easy, the Trade Easy people, and I told them that I'm looking for Bitcoin sells. If the sell signal comes, I will take it, right? That was around over here. Okay, but I said that when we think about the sweet spot of the daily macro, which is 8:30 to 10, that will be it. That will, okay, you know what? I'll also cover that in this video. 8:30 to 10, that's a sweet spot for the daily macro. Okay. So the daily macro, we can see price ran down, and in that red color box, which is the opening range that we discussed, right? It hits a key level there. Now, how do I gauge this reaction? When it comes here, not reacting, what am I going to do? Nothing. Now we have a good reaction. Now let's see the candle count, right? Low, 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 the swing gets validated by one candle. So this is a candle count of three. One, two, three. So I know that, okay, you know what? If there's an inverse gap, I'm going to buy. But I didn't buy because I was looking for a sell, right? It was kind of counterintuitive. If you take a buy while the algorithm is telling me it's a sell, it doesn't really go that well. It doesn't go that well. So this is an instance in which it did go well. Okay. So what you would do based on the learnings and the teachings, learnings, what you learned in this YouTube channel, you know that you can buy there, stop loss below the IFVG candle, and your take profit is, of course, it's going to be based on the measurement, right, of the manipulated range, first manipulated range, 3 standard deviations. That's that. Okay, that would be the buy, which I did not take. But the sell, I told you guys, I took it, and if you are in the public Telegram group, you can definitely see uh, that it did indeed take the sell. Otherwise, why would I talk about it? Okay. Now, let's take this one step further and let's look at this from the lens of the London macro and also, yeah, well, that's basically the London macro. All right. So today on Bitcoin, and we'll also look at gold, the London macro, which is here, right? We are thinking to ourselves, okay, you know what, I want to sell because the bias is bearish. So I'm going to find my key level. So go to 4 hour. My key level is here. There, see that, okay, there. So I'll go back to the 5 and I want to see, okay, you know what? Maybe I want to buy until we get there. Yeah, I want to buy until we get there. So if I'm going to buy until we get there, then let's see how I'm going to buy. We enter the macro, okay? Uh, that is the London opening range. Price jabs down into a what? Bullish key level. Let's see. Are you getting the truth showing? Price comes down into a bullish key level. Yes, it's revisiting this bullish key level. Remember, bullish key level in this case can be used maximum twice. All right, so we hit that bullish key level, and now we want to look for a buy. All right, so here on this time frame, the swing formation is done. 1, 2, 3. Okay, but you want to see it in the macro. So in the macro, I can't see anything. Let's drop down to the 3-minute chart. On a 3-minute chart, what we have is 1, 2, 3, 4, 5, 6, 7. No, invalid. Here, 1, 2, 3. So this one forms in 3 candles, which is good, right? So now we have an inverse gap happening here. And now because you know about structural inducement, you know that, let's remove this, you know that this is your what? Inducement. And you're looking for price to hit there, it hits, yeah, you saw price hit there, and you want to try to buy, right? All the while understanding that you need a key level to hit to go short, right? So if you go back to the 4 hour, I mean, I'm still thinking, okay, where is my possible sell area? Possible sell area, where are you? Okay, the possible sell area is so far nowhere to be seen. But where? Now we have a change of heart. What's the change of heart? Change of heart is this. We saw this as a support, but it was broken, right? Here. Now you can think of it in two ways. One way is this broke, and if price gives the immediate reaction, okay, good, it's going to go up. We can also say that we broke and this is going to be used as a retest to sell off. So this break, price goes and hits it, and now we're expecting price to go down. So if that is the case, yeah, if that is the case, then we can argue, not argue, well, it's objective, so no need to argue. We can say that this run up here, 4 o'clock to 4:30, we ran up and hit this key level. Okay, no need to go higher than this again. So if that's the case, when we reacted here, high, higher, high, this swing high formation was validated after 1, 2, 3. So 1, 2, 3, 4, 5 candles. So it's invalid, meaning I can't really take anything based off of that. But if I go to the 15-minute chart, maybe. But on the 5-minute chart here, we have 1, 2, 3. So this is a good reference point for me to say that, okay, you know what? If I find an inverse gap, I will definitely take it inside this. So if you go to the 3-minute, you can see that we have this there. Okay. Okay. Now we have that. Now you can say that London macro finish, but I can still take it because we're in the daily macro, that 520 to 11. And we know that 520 to 6 is still within London, so we can take it, right? So if I put a sell here, keep my stop loss above the high or above this one, depends, right? And what you can do then is you can use the manipulated range from this high to this high, this low to this high. That is my full take profit. Okay, so what happens? Stop loss. Are you phased? No, not phased at all. Now, taking this stop loss, you're thinking to yourself, holy shit, what did I do wrong? Chill, nothing's wrong. It's just that this was a problem there. The peak formation itself did not form properly. Okay, now if you go to the 3 minute chart, and you still look at that peak formation, it's 1, 2, 3, 4, 5, 6. Huh? So what? If you go 1 minute chart, you can see it's 1, 2, 3, perfect. Price goes and sells off, but on the high time frame, nada, nothing. And we are ending the session. Okay, so now wait for the correct session. Now we go to the next session. All right, so we can see 1, 2, 3, 4, 5. Okay, now we are getting a big reaction. 5 candles. Oh, that's not good, right? Check the 3 minute chart also. 1, 2, 3, more than 3. 1 minute chart over here. 1, 2, 3, 4. Okay, here. Now, if you are here, when you see a price here, in the dead zone, basically, you want to take it. You would want to take it, right? Now, if you want to take it, you can take it and keep your stop loss up over there. That's okay. Okay, you can take it and you can keep your stop loss up over there. That's fine because on the 1 minute chart, it is more or less valid. Okay, it is more or less valid on the 1 minute chart, right? But not really, meaning I wouldn't want to risk it. Okay, if you check the 15 minute chart, we can see that 1, 2, 3 on the 15 minute chart, perfect. So you know that the 15 minute chart says, okay, you're good to go, right? So keeping that in mind, on the 15 minute chart, everything is okay. So within this swing high fractal, what you do is find the inverse gap. Because you know it's good to go, right? Happen within 3 candles. Perfect. Inverse gap is here. Why? See, gap is here. Formed a wick, went up, failed. Okay. So you can keep your sell limit here. Stop loss above the swing, above the IFVG candle or above the swing high. I keep it in the middle sometimes. Okay. Now, what is my point? Meaning, what's my TP? Right? My TP is going to be this. Now, let's see if it worked out or not. There you go. You get a sell projection. We get a sell signal right there, which is given more fuel for the trade, and down we went. Okay, now let's think about that buy. Actually, I showed you the buy, so no need. So buy happened in the sweet spot, price goes up. Okay, now we'll think about the sell. So we know that, okay, this is the 10 to 10:30 opening range. Price rallies because it's not hitting the key level, nothing. Price rallies into a key level, perfect. And now we can see this. 1, 2, 3, 4 candles. Perfect. I like it. Even though it's like a B type setup, I don't believe in these qualities, but this is says low quality. Go to 3 minute chart and see if you can find an inverse gap. The first inverse gap that happens in that fractal. Yeah. Okay. You can see that. That's the hit. That's the hit here. Boom. Okay. Keep your eyes above the IFVG candle there. Swing high or in the middle here. All right. And your take profit is going to be here. So let's make it simple here. All right. And it makes sense to take out this low because this is that range. Price manipulates into a key level and then it will distribute down to this low. That's kind of simple, right? So sell signal there, boom, finished. And that was these were the best possible trades you could have taken today. Today I took this. I think I sent it to you guys in the public Telegram group. I'm not sure. If I didn't, I will send it again. I will send it. But I took a sell, I think, where was it? I took it here. It was a very late one because I was out. It was a very late one. Took the sell here, went down nicely, closed it completely. Okay, you can see how this is panning out because the daily bias is bearish. So what? It must go down. Okay, should come and take out this low here. All right. Now that's that. Now if you take a look at Nasdaq, pointless because market is closed. Gold before I stop, right? And then we'll take a look at the daily macro. The sweet spot. Okay, I will do another dedicated video for that as well. But for now, because I'm going to take some time off from teaching, focusing on the boot camp and focusing on the one-on-ones. and also the Trade Easy members. You guys can join, by the way. Link is down in the description. Or if you can't find the link, you can definitely send me a message to get into Trade Easy. It had the prices have been slashed to from $100 to $40 per month. Insane value for money. You can clearly see that it's working out just based on these arrows, right? So today, during the London session, I took this buy. Okay, even though I wasn't supposed to take any trades today, I took this buy, right? Now, if you come back here, and we have to understand one thing. What's the first step? First step is, okay, we finished the opening range. Now directly go to the 4-hour daily chart. Find the key level, right? Not ICT key level, okay? Malaysian SNR. Here, we have red price came and hit it. So, go back to the 5. We know that price hit. Not here, my bad, here. So, we went up, came down and hit that key level at or after the opening range formation. No need to manipulate this anymore, right? So, after that, think about the swing formation, okay? Here within the macro, right? So 1, 2, 3, no, not a good one. 1, 2, 3, yes, this is a good one here. This 1, 2, 3 is a good one. So within this range, so let me mark out the high and low. So this is the high and this is the low, okay? Within this range, find the IFVG now. Let's see here. We form that, price comes down. Where's the IFVG here? Here is the IFG, there, okay? And what I did was I bought there. Simple. Okay. I don't know if I took a screenshot of this, but I did buy here. All right. And my take profit was based on the 5-minute chart, of course, as usual. Now, before I move on to showing you the take profit, look at the signals, right? I know the bias is bullish, as you can see. The daily bias is bearish, but when we trade above the Asian range, it gets invalidated and it becomes bullish. So I'm going to switch to bullish. Okay. Switch to bullish. And you can see on the right side there, buy signal, buy signal. So I'm getting buy signals flashing. So I have a lot of things going for me. What I can do is I can take the range from here. I can do this. Alternatively, I can take the London range, what formed in London, here. Right? And I can do this with partials coming off here. But I chose this, okay? I didn't do the big one. So partials coming off here. Right? Now you can see how it went. Okay, you entered in the macro. Price rallied like mad, and then it started to sell off a bit because the market is closed due to the national mourning day or something, right? Because the futures market is also closed, I couldn't trade my futures account. So it would be a break even if I had it all the way there. After partials. My bad, after partials, okay? Nice hit, and then this came down. I was looking for longs over here with my Trade Easy during the live stream. That did not work out, right? So that's that. So that is how you use the candlestick reaction framework. All right. Few more tips here. Yesterday, on the 8th of January 2025, I showed you guys that gold was selling off over here, and I took a sell, right? So this one, can you see? 1, 2, 3. This is a good one. 1, 2, 3, 4. Still a good one. And they went down nicely. Then a lot of people who are trading quarterly theory thought that this is going to sell off. I thought, hell no, it's not going to sell off. But I just kept it to myself. Okay. How did I know that? Well, we are above the Asian range, of course. So bias is bullish and the daily bias is also bullish. The weekly bias is also bullish. So the only way is up. Simple as that. So 1, 2, 3. This is a good fractal. So this fractal is over here. This one. That is going to be the basis for my inducement, for IFVG, for this, for that. So now let's think about inducement for a second. Here we have the 1, 2, 3 candlestick structure broken by this candle. That is the inducement. Okay. Now let's see the IFVG. 3-minute chart IFVG. Where are you? A 3-minute chart don't have. So now we go 1-minute chart. 1-minute chart after inducement. We have IFVG here. My bad, here. This one. Okay. So what you would do is you would buy here, keep your stop loss below the IFVG candle, or there, or in between. Me, I will be in between. Go back to the 5, and now what you will do is you will simply put poof straight here because you have no reference point. Yeah, no reference point to do a projection unless you take this there and you put the same damn thing there. But we know if it's an internal reaction, it'll go to the external pole, right? So let's see. Okay, went a bit deeper. I will enter again if it goes a bit deeper. And then I think we're coming into today's price action. Yeah, and that would have been a nice hit, as you saw, based on what we did today. Okay, so that is that. So to summarize, and then we move on to the next topic to end the video for a bit. If you get essentially 1, 2, 3, it is good. If you get 1, 2, 3, 4, it is good. Okay. If you get 1, 2, 3, good. 1, 2, 3, 4, okay, it's good. Anything more than 4 equals to no. Okay, and at least you want a high time frame, right? Let's say not just 1 minute, okay, 5 minute, 15 minute, because you know it's part of a bigger move, it's part of a bigger macro in terms of a macro perspective, not time macro, but just the general macro perspective. Okay, and top it off, look at gold now. All right, so we can see 1, 2, 3. Oh, so now we use this IFEG here. You can see if it will go long or not. Here also 1, 2, 3. So that's all good. Price come back down to induce this fella. Use this IFEG and then go up. If it is even gonna do that here. Let's see if it does, I might get in. Okay, so that's that. All right, so now let's take it a step further and let's talk about the sweet spot of the daily macro. So the sweet spot of the daily macro is going to be 8:30 to 10. Yeah, there. So for the sell-off, you can see that it happened exactly there, and then price went into the fractal and then it started dropping. That's that. It is as simple as that. But now, if you look at it properly over the past few days, right, 8:30 to 10, 8:30 to 10, 8:30 to 10, you will see that you can treat that 8:30 to 10 range also as one in terms of the framework I gave. Okay, so here 8:30 to 10, price comes, boom, hits inducement, IFAG goes up, and you get the trade for the day. Okay, that's another one. Over here, let's see. Oh, this. Oh, I remember. Okay. 8:30 to 10. So if we look at this, there, 8:30 to 10, go up, bada, bada, bada. 1, 2, 3. That's a good way to look at the fractal. Find IFEG inside, wait for the inducement, go down. Perfect. Then you have, see, another final day on gold and look at one on Bitcoin and let's call it a session. Okay. So here, 8:30 to 10. Let's see where you are. I think that's what we just did, but let me see. Yeah, I think that's what we just did. Okay, let's go to another one. Over here, maybe? Yeah, okay, over here. So let's say 8:30 to 10. So you're waiting for this 8:30 mark, okay? Then only you're taking a trade. Don't do anything stupid, right? 8:30 to 10, you have this framework over here. See if you get into a key level. If you did go into a key level, what you can do is you can buy, right? So taking a look at this here, just to blend everything together, let's take a pseudo trade, pseudo demo trade, even though I know how it went. Okay, so 1, 2, 3, 4. Already we know that it's not validated by 4 candles. 3-minute chart. Okay, 1, 2, 3, 4, 5. Still doesn't matter. It doesn't count. 1, 2, 3. Okay, formed here. Okay, but now let's say we're only interested in what I said. So we know that 5, 3, and 1 is not good. 1 is good, 5 and 3 is not good. So on a higher time frame, we must see this. Okay, 1, 2. Let's see, 3. Okay, you have one last chance. 4. Good. We hit. Now go back to the 5, and we can say that okay, this is my FEG there. All right, and this is also potential one if you go a bit higher and come down. Okay, now come induce, please. Come induce, please. Yeah, good. Now you buy. Okay, stop loss going to be below the IFG candle or here, somewhere here. For me, I go here. Okay. Now we will take this high, take this low. They're inside of the New York special macro as well, but this is a daily macro. We got the position. Put this to 3 standard deviations, and we will do this. And we will do this. And we will do this. All right. So let's see if it panned. What the hell happened? Okay. Let's see if it panned out or not. All right. Let's see. Let's have a look. PM macro. All right. I think long story short, I think it did, of course, it hit today, I think. So let's see. We would take partials, of course. Of course, we take partials. And let's see if it's a full one. I think that will be today or yesterday. If not, you guys get the gist of it, right? So you would take partials down here. All right. Now we're coming into today's price action. From there, let's see if it hits or not. London macro. Now we start to spike. Hit, and finished. And you can see how perfect that was. Right? Everything works. No fluff, no nothing. Everything is objective. Okay. And that's pretty much it. That's how you use a daily macro. That was on gold. Finish it off with Bitcoin for today. Here, 8:30 10. Sweet spot for the daily range. Poof. Okay. And then sweet spot for the New York session. Poof. Because the daily bias is bearish, right? So we're gonna go back down. And that's pretty much it, guys. Okay, so we will have another in-depth video on the daily macro, the sweet spot inside the daily macro. But until then, we will take a look at pre-market analysis and post-market analysis when I have the time. Hopefully, it will be on a bi-weekly basis or tri-weekly basis. All right, as much as I can do to help you guys. So that's it. The boot camp, guys, please join. One done, 9 more spots left. Trade easy, please do get it. You can see how it makes your life so easy. I don't understand why you won't get it because uh, this is a game changer. It makes your trading so simple. Just put an alert, look at the algorithm, take a buy, take a sell. Day is done. Easy money. All right. I don't know why you would turn down easy money at a fraction of the cost. It's just one trade will cover your monthly cost for trade easy. Literally. All right. So that's it. Bootcamp is open. You can definitely send me a message for the bootcamp. It's going to be even more in depth than what I'm teaching you guys on YouTube, of course. Yeah, but that's up to you. I can't force you. All right. So with that said, I'll see you in the next one. Good luck and good trading. Like, comment, and study. Okay. All right. Bye bye.